Good day, traders. Welcome back to my YouTube channel. So today we're doing a video about SMC, Trendline, and Imbalance. Okay, so here I have a pair of Euro USD. So first, guys, as always, guys, you identify your what can I say, your imbalance, your last candlestick before the imbalance. Then after here, you identify your break of structure. So after identifying your break of structure, I move to the down time frame. Okay, so let me put this correctly. Place my long position. Is it long position or short position? I'm not sure. Yeah, but those. Okay, from here to there. That exactly what I'm seeing. And I see and plotting and what and a trend line there. So here we're going from here eventually to there. Because of the gap hasn't been filled, so market has to come here to fill the gap that was left. So we have a trend line here, trend line liquidity, trend line liquidity. Let me just fix it to have a full view. Place it well. Okay, change the name. Let me change trend line liquidity. So let's go to 30 minutes. So I see something there. So here I see and what market has touched what my last candlestick before the impulse. So market has touched my last candlestick before the impulse, which might go up, which market might reverse from this level. 15 minutes time frame to a full view. Okay, so let me take my long position or short, I don't know, because they confuse me, both of them. Mark my break of structure there. Okay, so from here going there, that's what I'm seeing. From here going there. Okay, because if you guys must know, you're using SMC strategy, you identify your last candlestick before the impulse, and market has to pull back to retest the gap that was left, and it must fill it. So this gap was retested on 30 minutes time frame. So that's what we have here. Okay, USD JPY. Okay, I see a nice last candlestick there before they drop. Okay, let's identify it as our funded area. Okay, guys, SMC is the best, easiest strategy you can ever use, because you just have to what identify your break of structure. After identifying your break of structure, you look for last candlestick before the impulse, which you are going to use that as a zone. Then you just wait for the market to bounce back to fill the gap, like what we have here. Market hasn't filled the gap yet, which might reverse to bounce back there to fill the gap that was left. Okay, so here, drop into this level, drop into this break of structure. That's what we are expecting from the setup. Okay, so from H2, let's see what we can see here. Okay, trendline liquidity. Let's try to identify one here. Let's try to identify one here. Trendline liquidity. Okay, 30 minutes time frame. Let's see what we have. Let's see what we have. So guys, comment below, comment on the comment section that I must make a video about uh explaining the trend line liquidity, so you guys must just understand it, how it actually works, because it's just simplest thing you guys can use, basically can use and combine them with with the SMC other, what can I say, other method you use, how to get your entries. So you guys comment below that. So from here, market but market here is just what can I say, market has bounced back here. So here there are less possibilities that market must pull back here to retest here, because of I don't think market will come here, but we don't know, we don't control the market, we just follow what it gives us. That's how it works, basically. So this is what we have. Let's move to another one. Okay, so here we have what? USDCHF. Let's see what USDCHF has for us. Okay, H1 there. Okay, we have a nice drop there. Let's take our rectangle box there, identify that one first before anything. Okay, so here we have a what? So here we have our last candlestick before what? Before the drop, which you guys must first identify that without doing anything else. Identify it as what? As our funded area. Okay, so secondly, let's plot there where our setup will start and end at. Okay, draw my break of structure there. Draw my break of structure there. Let me fix this. So basically, guys, this is what you have to do, guys. You just have to identify the last candlestick before what? Before the impulse. Then that's how you will get your entry, your snap award. That's how you'll get your snap award. Because of market has to pull back to fill what? To fill the gap that was left. It has to. There's no other way. It has to pull back and fill the gap. Okay, so here I have what? Break of structure. Okay, break of structure. No, I can't do that one here. Would ruin my setup. So here we have what? GBP, JPY. Let's move to the highest time frame. H4. Let's go to H4. H4. Okay. So it's simple, guys. You just get to the chart, identify the last candlestick before what? Before the impulse. After doing that, you identify your break of structure. You identify your break of structure near, might be near or far away from your your last candlestick from before the impulse. So here we have what? We have we have what? GBP JPY here. Let's go to H2 to have some more clarity. Okay, let's move our rectangle box there, because guys, and again guys, so I didn't mention this. So going down from H4, you have to just adjust your rectangle box because of what we have on H4 won't be the same as what we have on H2. So you just have to adjust only. So here I can see I have a what trendline liquidity here. I have a nice. I have what here I can call as a trendline liquidity here, which market really pulled up there to test our what our last day, tapped our last candlestick before the impulse, which was what I was talking about on on the last setup before this one that I was analyzing. So market bounced back there to test what last candlestick there, which what works along with this trendline liquidity. So along the trendline liquidity we have what we have a that touch here. So this setup is strong because we have a third touch, and along the third touch we have again what we have a, what can I say, we have an order block. I can say order block. We have an order block there, which is called as an what funded area. Okay, nice spread H1. Okay, so here we have what AUDJPY. AUDJPY. Let's see what we have. What H4. So here we have what we have AUDJPY. So from AUDJPY we have our break of structure there. Again, let me plot again my break of structure. My break of structure there. After my break of structure, look for what? You look for last candlestick before the impulse. So this one is our last candlestick before the impulse. Okay, that's our last candlestick before the impulse. Okay, so from there there's no other way we are going there. As you guys can see, the market is really going up. It's really going up to fill the gap that was left. So it has to fill the gap. Then after filling the gap, bounce back. That's where you enter. That's where you might go full margin if you want to. It's up to you. You know, you guys know. It's either you go big or you go home. That's how this game really works. Trendline liquidity there. Trendline liquidity, okay. So market here might break our trendline liquidity. If I'm sure about that, because of here I can see we have what might come here to fill what can I say, the smallest order block we have there, because of it broke a break of structure there. Okay, so from there we're expecting market to come to that level, guys. So that's it, guys. So you guys, I hope you will like, share, and turn on that notification so you guys will get notified when I drop a new video. Thank you, guys.